How are fractional shares taxed? In today's financial landscape, many students are looking for ways to invest, and fractional shares have become a hot topic. With the recent rise in interest for accessible investing, understanding how fractional shares are taxed is essential. If you are a student or a new investor, you might be asking, how exactly are these fractional shares taxed? Fractional shares representing a portion of a whole share of stock, allowing you to invest with smaller amounts of money. This can be especially appealing for students who may not have large sums to invest. When you sell fractional shares, the gain or loss is determined by the proportionate cost basis compared to the sale price. For instance, if you purchased half a share for $50 and later sold it for $60, you would report a $10 capital gain. This gain is subject to capital gains tax rules, which vary based on how long you held the shares before selling. If you hold fractional shares for more than 1 year, the gain is generally taxed at the long-term capital gains rate. This rate is often lower than the short-term rate, which applies to shares held for less than a year. Dividends received from fractional shares are taxed as ordinary income, similar to dividends from full shares. This means that any income you receive from these shares will be added to your overall taxable income for the year. For students investing in fractional shares, keeping accurate records of purchase prices and dates is vital. This will help you accurately report gains or losses on your tax returns. Most brokerage platforms that offer fractional shares provide tax documents detailing your transactions, making tax filing easier. In summary, fractional shares are taxed on capital gains and dividends just like whole shares. The tax amount will be proportional to the fraction owned. Understanding the tax implications and maintaining proper documentation will help you manage taxes on fractional shares effectively.